Hi everyone, this is Bagadon at Stock Market Caddy. It is June 6th at 12:30 p.m. I want to bring to your attention something that is not everyone is in agreement on this, and it's not something that happens every contract rollover, and some say that it has no impact at all. But I want to point it out, and I'll let you be the judge, not just on this contract rollover, which I think could be interesting, but in future rollover periods as well. Now, if you are if you're not a futures trader and you trade stocks, or you're trying to make a gauge on the market, I think you would be remiss if you don't pay attention to this. This ES contract is the futures continuous contract for the S&P 500. This is the COT, Commitment of Traders Report. It's about a week behind, but it's the latest information we can get. This non-commercials are the large hedge funds, usually the folks we like to follow. The small specs are just that, small speculators. Now, the Commitment of Traders Report does not it tells us the net long or net short position. It does not tell us which contract they're actually trading. My experience has been, though, for the pros, they're well aware of rollover dates, they're well aware of hedging themselves, so it's really kind of a non-issue. The small specs invariably build up either short or long and put their back up against the wall. And let me explain. There are currently 390,000 contracts long the S&P. The large hedge funds are only 125, so almost 3 times the amount. Now, that in and of itself is interesting because this is one of the largest net long positions, if you can believe it, in the S&P by the retail trader in the last 10 years. They have been shorting, and this is one of the smallest positions for the hedge fund. So that large pros. So that in and of itself should tell you something. But this is the continuous contract. We're currently trading the June contract. And what I need to do is to bring up a calendar for June. The current contract expires on June 15th. Today is June 6th. So in another 9 to 10 days, the June contract is going to go bye-bye. But the reality of it is, somewheres between here and there, the September contract, which will be ESU 18, will begin to start. Well, it's trading now. But the volume on the September contract at some point very close will begin to outpace the current contract. And when it does, that is really considered what the pros will call the rollover day. This is the date of expiration. And what I'm suggesting everyone be on guard for is once that contract begins to roll, if the retail trader is not on his game and he needs to roll out, well, if he wants to continue going along, I mean, it should be a smooth event. But should this market begin to pull back going into the contract roll, I think there is a big opportunity to have a dislocation as the retail trader closes or sells these positions. They may not necessarily roll forward to go long. And if that's the case, we could have, I think, a dramatic turn down. This sometimes happens when a market, or particularly the retail crowd, are massively short and they get squeezed going in. They got no choice. When they're short, they just, and as the pros run the market in a particular direction, they just have to have to buy. In this case, if we make a dramatic move anytime soon, move down, these guys are going to be falling all over themselves trying to get out, out the fire escape. Just a thought. I know there are many future traders out there saying it's impossible to squeeze in the futures market. I'm of a different opinion. I think it can be done, but we'll just have to wait and see if this comes into play. Right now, the June contract is still fat and happy. It's trading some, 700,000 shares. September contract is only doing 100,000, so no one's looking, not only are they not looking out towards September, they're not even taking into account, what could come their way. Many times this can come at night, but I just want to point it out. I welcome thoughts, commentary. I'm not saying it's going to definitively happen and play out that way. I've seen it in other markets. I've seen it in oil quite a bit. More oil, more than others because it trades 1 month. It always trades the front month. I've seen it in the gold market. I've seen it in the silver market. There may be other explanations for it, but that's been my experience. Not on every rollover, and not saying that it's necessarily going to happen here, but it seems like the setup is in place. So good luck, everybody. I'm back at Don at StockMarketCaddy.com, and if you want to follow us, feel free. Any questions, let us know. Always welcome to call me at 813-758-8263. We are not a broker or financial advisor, so we're not giving a recommendation, and it's just an observation. That's all. Good luck.